Welcome back to Investing Talk Podcast. Today, we're tackling a question that's likely on many of your minds. Is American Airlines, is it a good time to buy now? And we're going to take a really thorough look at all the available information to help you, understand the full picture here. Before we unpack all the details, if you find this discussion helpful, please remember to subscribe, like, and maybe leave a comment. And if you're feeling extra generous, consider buying us a coffee. It really helps us keep these deep dives coming your way. So we've gathered a stack of recent analyses, financial reports, market insights, all about American Airlines. Our mission today is to cut through the noise, highlight the most important nuggets, and give you a clear, balanced perspective on what is really a complex investment opportunity. It presents this fascinating puzzle, right? A stock that looks incredibly cheap on paper, yet its share price just keeps tumbling. So what's really going on?
That's the core question. We'll be looking at everything from their financial health, market position, recent trends, what the experts are saying, so you can really weigh the pros and cons for yourself and maybe understand why the market is reacting the way it is.
Okay, let's start by digging into the financials. On one hand, American Airlines showed some solid revenue growth in 2024. They hit a record full-year revenue, $54.2 billion, up from $52.8 billion in 2023. That sounds positive, right? Strong demand.
It does sound good initially, and that consistent growth in 2024 is definitely a highlight. However, what's particularly insightful, I think, is their first quarter of 2025. Revenue came in at $12.6 billion, which was essentially flat compared to the previous year.
Flat after record growth?
Yeah, flat. And this isn't just about slowing growth. It suggests American might be hitting a ceiling, maybe in a recovering market, perhaps due to their specific routes or, increased competition grabbing that leisure spend. It kind of forces us to ask if that 2024 revenue surge was maybe an anomaly, not really a new baseline.
Okay, so if revenue is stalling, let's unpack profitability. We saw net income of $846 million in 2024. The profit margin was about 1.56%. I mean, it's better than the pandemic years, obviously, but that still seems incredibly thin for a company this size.
It is very thin. And if we connect this to the bigger picture, their operating income actually decreased, went down from $3.0 billion in 2023 to $2.6 billion in 2024. That signals serious margin pressure.
Wow. Okay.
And that pressure just intensified dramatically in Q1 2025. The company posted an operating loss of $268 million. That's a really sharp decline from the $13 million operating income in Q1 2024. It just reflects a truly challenging operating environment. Rising costs, fuel, labor, they're just eating into that top line growth.
So the profitability picture is, concerning. And for an airline, that often ties directly back to their massive debt load. What's the situation there for American?
American Airlines certainly carries a, let's say, substantial debt burden. It's around $36.6 billion as of March 2025. Now, what's compelling, or maybe encouraging, is that they've made significant progress reducing it. They cut $15 billion from the peak levels, a full year ahead of schedule. That's a positive sign, shows management focus.
Okay, so they are chipping away at it.
They are. However, and this is crucial, the balance sheet still shows a stockholders deficit of $4.5 billion as of March 2025.
A deficit, so liabilities exceed assets.
That's right. It means their liabilities actually exceed their assets. It leads to this negative debt-to-equity ratio of negative 640.1%. Effectively, shareholders own less than nothing on paper. It's a huge red flag. I mean, it highlights the company is in a deep financial hole, way beyond just strain.
Okay, well, despite that huge debt burden and the worrying profitability, I did notice in our notes their cash flow trends they seem to be telling a more positive story. How do those fit together?
They do seem better. The company generated strong operating cash flow, $4.0 billion in 2024, and hit a record free cash flow of $2.2 billion. Their free cash flow margin improved too, up to 2.40% in 2024. That strong cash generation is absolutely critical for servicing the debt and just funding day-to-day operations. But Q1 2025 showed some moderation. Operating cash flow was $2.5 billion. So while the cash flow is strong, it's important to remember where it's going. It's often used to just chip away at that massive debt pile rather than translating directly into, significant shareholder returns right now.
Got it. So beyond the raw numbers and these substantial financial challenges, how does American Airlines stand strategically? I mean, against its competitors, it's one of the big four U.S. carriers, right? Delta, United, Southwest.
That's definitely a key advantage, especially in a consolidated market like the U.S. The company maintains its position through a really extensive route network. They serve over 350 destinations, more than 60 countries. That breadth lets them capture diverse travel demand And their AdVantage loyalty program, plus those co-branded credit card partnerships. They're incredibly important.
More than just perks for flyers.
Oh, yeah. These programs aren't just about frequent flyers. They provide stable, recurring revenue streams. It's almost like a separate business unit. We saw spending on their co-branded cards was up 8% year over year in Q1 2025. That just shows how sticky that revenue is.
But as you said, it's a tough industry. The airline business is notoriously competitive, isn't it? It's not like they have this unbeatable advantage.
Absolutely not. American faces intense competition from traditional carriers like Delta and United, who often fight for that premium business travel, and especially from the low-cost alternatives. Many of these budget airlines have significantly lower cost structures.
Which lets them undercut fares.
Precisely. It allows them to offer cheaper fares and create significant pricing pressure both domestically and internationally. This really limits Americans' ability to just raise prices even when demand seems high.
Okay, now let's turn to something that often grabs investors' attention. The valuation metrics. The analysis suggests American trades at, well, surprisingly attractive multiples, despite all these financial headwinds we've discussed.
Right.
What are we seeing there?
This is where the puzzle really gets interesting, I think. The stock's current PE ratio is about 10.2 times trailing earnings. That compares pretty favorably to the peer average, which is around 16.5x.
So cheaper than its rivals based on past earnings.
Right. And the forward PE estimates, looking ahead, are even more compelling, roughly 8.0x against an industry average closer to 12.6x. Their enterprise value to revenue ratio, 0.7x, also indicates attractive levels relative to its sales base. It suggests the market might not be giving it full credit for its top-line revenue generation.
So on paper, it looks potentially undervalued. I saw one estimate suggesting, what, a huge 215% upside?
I saw that too.
If the valuation is so compelling and there's potentially that much upside, why is the market punishing the stock so severely? What are they seeing that maybe these simple valuation models are missing?
That's the critical question, isn't it? According to those analyst estimates using discounted cash flow or DCF analysis, American does appear significantly undervalued. The stock's trading around, what, $10.37, well below an estimated fair value of $32.67. That implies that potential 215% upside if the company actually reaches those intrinsic value estimates.
That's a big if.
A very big if. And the price-to-book ratio, well, it's less meaningful here because of that negative book value we talked about earlier, that key indicator of financial stress. The market is clearly weighing the risk of them ever achieving that intrinsic value very, very heavily.
Right. And while that fundamental valuation looks intriguing, the stock's recent performance tells a very different and, frankly, quite grim story. Americans had significant volatility, lots of downward pressure in 2025. It's fallen about 35% year-to-date, trading near its 18-month low. It really feels like the market is screaming, stay away, even if some fundamental numbers seem okay.
Precisely. The stock is currently hovering near its 52-week low of $8.51. It's fallen sharply from a 52-week high near $19. And the technical indicators. They show predominantly bearish momentum. For example, the 50-day moving average, around $11.10, is solidly below the 200-day moving average at $13.80.
The death cross.
That pattern, yeah, often call it death cross. It's a significant bearish signal, suggesting continued downward pressure and a deeply entrenched downtrend. It's like the short-term trend has decisively broken below the long-term one.
Beyond the death cross, what about other technicals, like RSI or MACD? Do they offer any hope, or do they confirm the bearish view?
Well, the relative strength index, the RSI, is around 42.24. That suggests neutral conditions, technically. It's not screaming oversold, but not overbought either. However, the MPD indicator shows clear bearish momentum. The MPD line is below the signal line at about 90.90, so that again points to continued downward pressure, confirming the overall negative technical feeling. The moving averages are basically yelling strong sell, while other indicators are mixed, maybe neutral to sell. The overall technical picture definitely leans heavily negative right now.
Okay, shifting gears a bit to market sentiment, how are analysts and insiders reacting to all this? The numbers, the stock performance, recent company updates?
Analyst activity recently has been mixed, leaning negative. Jefferies, for example, downgraded American from buy to hold back in April 2025. They cited disappointing consumer sentiment, uncertainty around tariffs, and that move actually affected multiple major U.S. carriers, not just American, so some broader industry concerns there too.
And what about management's own outlook?
Well, American actually withdrew its full year 2025 guidance in April. They joined peers like Delta and Southwest in pulling annual projections because of all the economic uncertainty. They did provide Q2 2025 adjusted earnings guidance, 0.50 to $1 per share, but that was below what analysts were expecting.
Any reason given for the weaker outlook?
Management pointed to the impact of an operational issue, Flight 5342 apparently, and also just general softness in the domestic leisure travel segment affecting their Q1 performance. The revenue environment simply turned out weaker than they initially thought it would be.
Okay. Any signals from insider trading? Are executives buying or selling shares?
Insider activity shows, well, mixed signals. It can be tricky to interpret sometimes. Some directors receive stock option awards in June 2025, but those are often part of regular compensation. On the other hand, some executives completed stock sales in late 2024 and early 2025. Notably, the CEO sold over 100,000 shares for about $1.76 million back in December 2024. Now, insider selling doesn't always signal a lack of confidence. People sell for many reasons. But substantial sales from top leadership, well, it's certainly something investors tend to watch closely.
Okay, looking forward then. What upcoming events or developments could maybe shift the narrative for American Airlines? Any potential catalysts for change, positive or negative?
The next earnings announcement is definitely key. It's estimated for July 24th, 2025, before the market opens. That quarterly report will be absolutely crucial. It'll give significant insights into their progress or lack thereof on cost management and any revenue recovery initiatives they've put in place.
And operationally, anything on the horizon?
Well, operationally, they are continuing to expand their international route network. They've got new European destinations scheduled for summer 2025. American plans to offer more than 70 daily departures to over 20 transatlantic destinations. They're clearly aiming to capture more of that potentially higher margin international travel. And then there's a significant long-term opportunity, that exclusive 10-year co-branded credit card partnership with Citi. That begins in 2026.
Ah, the loyalty program leverage again.
Exactly. This could provide a really stable, substantial revenue stream for years to come, potentially insulating them a bit from fare wars.
So we've talked about potential upsides and catalysts, but what are the big picture risks? The things potential investors need to be acutely aware of when looking at this stock?
The whole aviation industry faces some strong macroeconomic headwinds in 2025. You've got ongoing geopolitical instability that can disrupt routes, impact fuel supply chains. Rising fuel costs are a constant threat. Fuel makes up, 30–40% of operating expenses for airlines? Huge number.
Yeah, massive.
Then there are labor shortages, particularly pilots and ground crew. That affects capacity planning, drives up training costs. Supply chain disruptions are still delaying aircraft deliveries and maintenance too. And on top of all that, elevated interest rates. They significantly increase aircraft leasing costs and the cost of servicing all that debt we discussed, hitting that already strained balance sheet directly.
And are there specific risks for American beyond those broader industry challenges?
Oh, absolutely. American faces specific operational challenges like those pilot shortages affecting their capacity planning and driving up training costs. It can limit their ability to actually fly all the planes they have. Their high debt burden, that $36.6 billion, creates significant financial leverage risk. It fundamentally limits their strategic flexibility, makes it harder to invest in new routes, new planes, new technology. And that negative stockholder equity of $4.5 billion, it just keeps indicating ongoing balance sheet stress. It means they're essentially operating on borrowed time and, frankly, lender goodwill until they can fundamentally improve their financial footing.
Really sounds like a complex and challenging landscape they're trying to navigate.
It is. The industry faces multiple, often interlocking headwinds. You've got intense competition from low-cost carriers constantly pressuring fares, geopolitical tensions hitting international routes and fuel supplies, persistent labor shortages impacting operations everywhere, plus economic uncertainty and the potential for a recession that could really hit travel demand, particularly that higher margin business travel segment. And even though industry revenues are projected to top $1 trillion for the first time ever, which sounds great, profit margins remain razor thin, just 3.6% projected for the industry. So while there's volume, there's just not much room for error when it comes to profitability.
So let's bring it all together. What does this all mean for you, the listener, and that core question? Is American Airlines a good time to buy now? It truly seems like a classic contrarian opportunity, doesn't it? Trading at compelling valuations on paper, but facing really significant near-term operational and industry challenges. It's that value trap or hidden gem dilemma.
That's a good way to put it. The key insight isn't just that it looks cheap on paper. It's whether those deep-seated structural issues and the industry headwinds are truly baked into that low valuation already. Or if its powerful brand, that network, the loyalty program, can somehow carve out an unexpected path to unlock that theoretical, 215% upside. Based on the comprehensive analysis we reviewed, it received essentially a hold rating, a 5 out of 10, where 10 is strong buy, 1 is strong sell. Basically, the outlook is highly mixed, leaning neutral.
So no easy answer.
No easy answer. Those attractive PE ratios and the potential DCF upside conflict directly with the deteriorating fundamentals and those persistent industry headwinds.
For anyone actually considering an investment, the analysis did suggest an entry price range, right? Around $9.50 to $10.50, maybe providing a bit of a margin of safety.
It did suggest that range, and it specifically noted this stock is probably better suited for patient, long-term investors. Think 3 years or more out, definitely not for short-term traders. Given the high volatility and that negative technical momentum, you'll need a strong stomach for this one.
That raises the important question for you, the listener, thinking about this. Are you prepared for potentially continued volatility? Maybe even further declines before any meaningful recovery might materialize?
Because the investment thesis here really relies on American successfully navigating these current, very difficult challenges. It relies on them benefiting from an eventual broader industry recovery and really leveraging that route network and the loyalty program advantages. The market is essentially sitting back, waiting for them to prove they can turn that operating cash flow into consistent profitability and, crucially, a stronger balance sheet.
This has been a really thorough examination of American Airlines. As you consider all this information, maybe think about what elements in the airline industry or even the broader economy might shift the balance for companies like American in the coming year. What specific changes or improvements would you personally need to see to feel more confident about their trajectory? Maybe a sustained return of high-margin business travel, or perhaps significant lasting shifts in fuel prices.
Definitely keeping a critical eye on their next earnings report, July 24th, and how they explicitly address those ongoing operational pressures, the labor costs, that domestic leisure softness. That will be key. That's where we'll see if management can actually execute on the very difficult task ahead.
Well, thank you for joining us for this deep dive. We hope this exploration has given you a clearer, more informed perspective on whether American Airlines might be flying towards a rebound, or if it's still stuck in some significant turbulence. We'll be back soon with another stack of insights for you.